One of the things we're looking at within the PMI data is the new order profile. Is that improving? Is it showing a momentum shift? And we don't look at just the pure data, we look at the momentum over the last 3 months or so. And that's actually improving on the new order side. The inventory side in China is still a little concerning to us, but overall, what we see from the PMI data is that we've bottomed and is actually picking up a momentum profile, and that the next series of releases we'd expect to see back through the psychological level of 50. And so yeah, we're looking for a cyclical recovery during the next quarter in China. Whether that's going to be enough to be self-sustaining into the second half of the year, we're going to have to watch the investment profile going forward. It's holding in. We've seen retail sales releases which are okay. The bringing forward of government investment plans is likely to see that bolster. But one of the areas that we're a little concerned about is that the inventory stockpiles that have been built up specifically in the bulk commodity sector are still pretty large, and steel prices are pretty low. That's giving us the impression that genuine demand for infrastructure build is still a bit lacking. So the housing sector, infrastructure sector, although it's getting some boosts at the moment, may not be the driver that it was. So seeing the consumer pick up, seeing retail sales pick up, and seeing some of the service side of the economy pick up is probably going to allow for a more balanced growth profile going forward. But we need to watch the data to see whether it really comes through. So a mildly positive profile. Yeah, Ukraine is seen by investors as a political event, but a political event can become an investment and market event if it's allowed to exacerbate. So at the moment, it's gaining a lot of press headlines because of the political tensions between Europe, the Russian bloc, and obviously the US. But as long as it's contained to a series of anxieties, then market-wise it's probably not going to have a huge impact. The danger is that the sanctions become more severe, and that the supply of Russian oil and gas into Europe is impacted, and trade profiles start to slide. That is our key interest, and that needs a bigger escalation in the political tension. So it's a concern that's mounting, but it could be a slow burner that fizzles out. So at the moment, it's an investor side story as opposed to investor headline. It's a political headline though.